The problem most people have when trading crypto is trying to identify, when do I actually buy and sell? Like, where are the price levels where I can actually get in and out at? How can I have confidence in them? In this video, 5 very simple steps, a trading strategy that we're going to go through step by step. As you can see here, it's these 5 steps. The fundamental assumption of what crypto is, the big idea about what actually drives crypto prices, and then top macro, on-chain, and technical indicators for telling us what part of the cycle that we're in and when we need to get in and out. Timestamps for all that below. You're going to need 2 things in this video. Firstly though, which is a TradingView account, completely free. I'll leave a link to it in the description. Just an email sign up. There is a pro version. I don't think you need it, but you can check the details via the link below. Obviously a trading system as well. I use Bybit, linked to a deposit bonus and trading bonus on there up to $4,000. So you can see the details via that link down in the description as well. What is our fundamental assumption when we trade cryptocurrency? Before we get into the technical details of trading and the strategy, what is the fundamental assumption that we have? For me, it's this. Crypto is an asset class that has secular growth. That means it's a long-term growth asset. So the fundamental assumption is that crypto, or specifically the best, most successful coins, are growing over time and will grow value over time. Fundamental growth drives long-term prices. Therefore, the most successful crypto assets and platforms will gain in value over time. Therefore, for me, I'll play the odds and look to have long strategies where I'm buying into the best assets because I'm just playing the probabilities. I won't bet against fundamental growth. So the best, most successful assets in crypto will grow. There's going to be a lot of garbage as well, which we want to steer clear of. That's the fundamental assumption. Here is some data to prove that. This is Bitcoin active addresses. The price is up and to the right, which is great for investors. But the signal is the orange line. These are human beings joining the network, and they are growing higher all of the time through bull and bear markets. The general secular trend is upwards, and so we have a secular growth asset right here. That's the fundamental assumption. For Ethereum as well, as an example, you can also see transactions per day on Ethereum. We now have the Ethereum mainnet. Optimism and Arbitrum are growing as layer 2 networks as that network scales. More transactions over time, more users and use cases and activity means in general, we can assume that prices will rise over time given that secular growth trend continues. This will happen in many other assets as well. I'm just going to use these 2 as the biggest examples. Next up, as part of our trading and investment strategy, we can understand the top level, which is the macro economy and how that drives asset prices over time. Also very, very correlated to the prices of these assets. So if we can understand the macro cycles, we can much better time markets and understand when we get bull and bear markets. And if we know what type of regime that we're in, it's going to make our trading much easier. So what I will say here is that global money supply drives the price of risk assets. And I'll explain that further now. We want to look for 2 things. One is global liquidity and one is M2 cycles. M2 is just simply money supply of, you can have it of each country or the world in general. And global liquidity is central bank liquidity. That is the balance sheet of all of the major central banks as it grows or shrinks. We can use those 2 bits of information to understand how the market dynamics work. Let me prove this to you as well. So down here we have these indicators, and I'm going to go through this in the next section, exactly what these are so that you can use them on your trading view as well. Like I said, if you don't have a trading view, all the links are down below, and also all the other bits of on-chain information and everything else, I'll link it all down there for you. But what we can do here is just come and see some correlation between 2 things. Global net liquidity of central banks, that's central banks either growing or shrinking their own balance sheets in order to either shrink or grow the economy and supply and demand within it. And then global M2 is money supply. As that grows and shrinks, risk asset prices also grow and shrink. They have a correlation. So I just want to show you right here that this is one of the biggest bull markets of all time for BTC that we just got in 2020. Now, as you can see here, also, if we look down to the net liquidity from central banks, you can see around this exact time, you had a huge rise in net liquidity from central banks, and global M2 at the same time, which is global money supply, also grew. As money supply grows and as net liquidity grows, that means that central banks are creating money out of nowhere, debasing their currency to stimulate demand within the economy, and risk asset prices go up, as you can see from Bitcoin here. Even if you don't like Bitcoin and that's not the asset that you want to hold, what about another asset? On Ethereum, it's the same thing. We have a huge bull market for Ethereum, as you can see here, which coincides with a huge growth in global net liquidity and coincides with a huge growth in global M2 money supply. But we don't have to look at crypto. What if you don't want to invest in cryptocurrency? How about something very TradFi like QQQ, the NASDAQ index? You can see the exact same thing, a huge bull market for this index coinciding with a huge growth in global net liquidity and a huge growth in M2 money supply. How about the bear market though? If we can change this rectangle to show a bear market right here, this is a bear market where prices have come down. That coincides with a huge drop in the global net liquidity and a drop in the global money supply. These are the huge macro factors affecting the supply and demand and the prices traded for risk assets in the fiat currencies that they're valued in. So we can look at these two things to really understand what part of the economic cycle that we're in and whether we want to be very, very bullish, whether we want to be accumulating, or when these macro cycles will actually change. Here are the top two macro indicators you can use to look at these dynamics. M2 Global and net liquidity. Both of these are on TradingView, completely free as well. Go to your TradingView, get the chart up that you want to look. This is the price chart of Bitcoin. Indicators here. And the first one is global world monetary supply. So just search for that, global world monetary supply, and it should come up. It's this one right here. So this shows the global money supply, and it's measured in dollars, which is great because most of the assets we trade are measured in dollars as well. So just click that once and that comes down here, and it's this one, global M2. The other one that we want is net liquidity. So if we see this one right here, which I think is just global net liquidity, so global net liquidity, you can search for that right here. I've favorited these, so it's this one, and that gives you this orange line right here. Now these two things are, slightly different. M2 is the money supply around the world from most of the large central banks and currencies. So, how much money is in the system. Net liquidity is a little bit different. This is when central banks are growing or shrinking their balance sheets. Now, during times when they're trying to dampen out inflation and reduce demand, they're going to actually run off their balance sheets and restrict their balance sheets. And you can see that right here. So this is when central banks restrict their balance sheets, do something called quantitative tightening, right? So they're actually trying to restrict the economy and strengthen their own currencies to usually reduce inflation. And what that essentially means is you can see asset prices really don't like that environment. The fiat currency goes up in value and the risk asset goes down in value. I'm using Bitcoin because it is just the absolute apex pinnacle example of how this interaction works between fiat currencies, central banks, and risk assets. But you can look at the QQQ, you can look at the S&P 500. It's all the same, just a different percentage moves because of the growth implications of all of those different types of indexes or assets. So Bitcoin doesn't like reducing net liquidity from central banks. And of course, as money supply shrinks, then Bitcoin goes down as well. They have a complete correlation here. Now, why has this bear market for Bitcoin suddenly stopped and reversed? Well, as you can see here, we are seeing a growth of money supply and net liquidity. Recently, there's been a banking crisis in the States. The Federal Reserve and the Treasury pumped the market full of liquidity to avert that crisis. Higher liquidity from central banks. Global M2 is actually rising as well because this is from all of the central banks, including China, who are trying to stimulate. We have rising M2, rising net liquidity, and that is shown in the price of Bitcoin also rising. So these macro indicators are absolutely key to understand where are we? Are we in a bull market? Are we in a bear market? People think this is a bear market rally. Well, not if liquidity is increasing. So where we are in the cycle and what central banks are doing is absolutely key to understand the basis of where do we want to go? Do we want to go long? Are we trying to buy dips? Are we looking for a bull market? Are we looking for a bear market? These are the top indicators you can use for the macro. now that we understand where we are in macro cycles, we can then dig down to the next level, which for me is Bitcoin on-chain analysis or on-chain analysis generally. But as we know, crypto and Bitcoin essentially have very good correlation as well. So as Bitcoin does well, that is a signal that the market is easing and growth is returning. And of course, some crypto is going to do very well as well. So what we can look at is Bitcoin on-chain, 3 indicators right here: MVRV, Puelle multiple, and coin days destroyed. So essentially what we want to look at is where can we get a signal that we are in a good buy zone where we can actually trade and invest at relatively lower prices, given the fundamental assumption that we're actually in a secular growth market. We want to buy as low as we can, or at least understand that we're not in a bear market and a potential downtrend. We want to see, are we in an uptrend? Because that gives us a much better probability of obviously being right in trades if we are trading long. And of course, if you're in a downtrend, then maybe you can trade that way as well if that's what you want. For me, the fundamental assumption is that Bitcoin and crypto is a growth asset class, and so going short or betting against that is not playing the odds, but everyone is different. So let's look at these 3 on-chain indicators. There are many, many more, but like I said, what do we actually want to get from this? We want to know, can we have more confidence in the trades that we're putting on? So that's all we're doing at all times. So as we've seen recently with those macro indicators, we saw net liquidity rising. So maybe asset prices are going to grow as well. MVRV tries to tell us if Bitcoin is over or undervalued or within a bull or a bear market. So what it does is it takes the price of Bitcoin, but it also takes away the realized cap or the realized price. This essentially is taking the price of Bitcoin last time it was moved. And so what we usually see during overheated bull markets is the MVRV spiking up very high, meaning that there's a lot of activity and people are exchanging Bitcoin very frequently during a bull market. And that's typically a sign that Bitcoin is becoming overheated. That usually happens towards the peak of general economic bull markets. And of course, what follows a bull market usually is some sort of a downturn. Conversely, you can see down at the bottom that during bear markets and drawdowns, the realized cap or the MVRV shoots way down lower. And this means that coins are much cheaper last time that they were transacted because obviously in relation to the price during the bull market, the price is much lower. Now, each of these times where the MVRV comes down into this green zone is essentially the bottom or the bear market bottom zone for each drawdown and each Bitcoin cycle. And so if you're a trader over the medium or long term, then obviously you need to be buying if you're going long during the bear markets. These are when you're going to get the most returns from your investment, given the fundamental assumption that this is a secular growth asset. So if you're a medium to long-term trader, obviously investing during those times is going to give you the best bang for your buck. However, it is somewhat lagging. So if you're more of a medium term or swing trader, then what you're really looking for is to trade in the middle of a rising prices. You don't want to be taking long positions when the MVRV is coming down and making lower lows and lower highs. That's obviously a downtrend indicating that the bear market is still continuing. What you're looking for as a shorter term trader, especially going long, is to look for an MVRV or other indicators that are making higher lows over time. So this in 2016, again, you can see the MVRV just making higher lows over time, indicating that we're definitely in a good uptrend right here. And we can see right here, as of this cycle, the MVRV is coming out of this bear market zone and potentially trying to make a set of higher lows as well. So again, if you're a momentum trader or a shorter term speculator, you're obviously looking for that as a good indicator to maybe take long positions, coupling that with the macro indicators as well. Next up is the Puelle multiple. It does the same thing, but it looks at minor profitability. So essentially, again, what we're trying to do is, where are we in the cycle? Are we having a drawdown, or are we actually making a set of higher lows going into an uptrend? So again, anything in the red zone up here is when miners are extremely profitable. That of course happens when the Bitcoin price is high, and not a great time to start going very long, hoping for higher highs all of the time. Usually a top signal in the macro and Bitcoin cycle. So again, what you're looking for is down in the green zone. These are times where long-term investors are starting to dollar cost average and pick up a lot of Bitcoin. knowing again fundamentally that the asset class is secular growth, and so they would assume that it's going to come out of that bear market. But again, during downtrends, not good to go long. Anywhere down at the bottom, obviously you're waiting for that turn into a more profitable miners. As miners become more profitable, just shows us that the Bitcoin price is going up, and you can see these cycles up and down that happen. So again, we can use this just as confluence to say, where are we in the cycle, and are we confident of going long right now because we're in an uptrend or not? Another on-chain metric to look at is CDD, or coin days destroyed. This spikes when very old coins are spent. Now you can see when old coins are spent, essentially sold, what's happening here is that very long-term investors and long-term hodlers are letting go of their coins. They just so happen to let go of their coins at the peak of the bull market. You can essentially trade along with very long-term investors, people that know Bitcoin inside out. You can see bull markets occur and the old coins are spent into those bull markets. Again, retail investors who are new and come in for the first cycle always buy these coins, but long-term investors usually let these go because they understand that these cycles happen. So again, what you can see is here, up at the top of these cycles, not great to be in going long up at the top right here. But again, we want to be seeing eventually that we're in some sort of an uptrend if we want to be speculating on that. Or if you're a long-term investor, again, when this is low, you can obviously be dollar cost averaging along with the long-term investors. And when this is spiking, it usually tells us that is the peak of a bull market. There are many more on-chain indicators you can look at. I do suggest look into Bitcoin. It's completely free as well, so I'll link this in the description. But pretty much all on-chain indicators set out very perfectly for you. In the crypto course, I do update on-chain indicators very regularly and give my opinions on them and how they're looking. So you can see the latest updates and research here. I updated the crypto investor course for free, Bitcoin on-chain update, macro update, and Bitcoin and ETH information right here as well. So if you're looking for over 300 crypto and trading videos, private Discord community, and you can see my portfolio and all of my research, that's all in the crypto investor course. I'll link it in the description. Now we look at technical indicators to give us some price levels. Technical indicators are much more for shorter term trading. If you're looking at day trading, speculating over the short term, technical indicators are going to give you price levels that you can trade at, that you want to be accumulating and letting some go, or you want to place your stop loss levels at. If you're more of a long-term investor, these technicals aren't really that useful. You want to be looking at liquidity really. But technical indicators, I'm going to look through these. This one is VPVR, volume profile visible range. This again is free on TradingView if you want to use this. So come to indicators here, then type in this one, volume profile. You can see that right here. Sorry, volume profile. It's this one. So you want to click on this. You can see it's very popular. It's going to come up with this right here. Now what you want to do is go to settings, and then you want to say bar horizontal offset. You want to put that to 100. I think it defaults to 20 or 30. It's too close. You want to get it to 100 so it's out on the right. Change the colors as you want. This orange line right here shows us where the most volume has been traded at a specific price. Very important if you are trading short term to understand where support and resistance is. It's where the most people trade at. So what we can see here is that at this price, which was the bear market low, let's call it at 16,500, massive amounts of Bitcoin were traded. That is a huge support level for the price. Now, as we come up, we have this level here, this one, and now this one. If you are trading short term, now you have to understand, when do I want to get in? If you're trading over a few days or weeks, the price that you get in at is absolutely key. If you're investing over multiple years, it doesn't matter if you're buying at any of these prices. So when we're trading short term, what we want to look at is, when do I get in? I have to wait for a good opportunity. And then where is my stop loss? And so we'll look at that in the day trading example. But for now, VPVR just shows you where the most volume is traded. And that's really important for your price levels, which I'll get onto later. And we can use this for support and resistance as well, which again, I'll get onto later. The next technical indicator is RSI, or relative strength index, this one right here. Now you can go onto your trading system. I'll show you on Bybit this time. Indicators. So you want to come to, either trade, spot trading or derivative trading, whatever, a market that you're in. For investing, of course, spot trading. For day trading, derivatives are far more suitable. I've got many other videos on all of that, which I'll link in the description as well if you want tutorials on Bybit and everything. I'll link them all below. But what we want to look at is the relative strength index. Now, again, this really is in correlation to the macro. I believe that liquidity from central banks actually drives all of this price action, but RSI is essentially correlated to that. So what we can see down here, this is RSI. So go to indicators and then type in RSI. It should be there on every single trading system. It's one of the first indicators that everyone will learn, relative strength index. It just gives us a view of the momentum and the relative strength. So it's not just prices that we have to look at, it's also the strength of the move of those prices, which is actually the signal. So again, what we can see here during the last bull market is the top for Bitcoin around 67,000. I think it topped out at around here, and very, very strong strength of this move. So the momentum of that move was very, very strong, which is obviously great. Now, as we get a huge drawdown after China said they were banning mining, we then get a recovery. But as you can see here, the price recovered very well. But if we look at relative strength, it was much, much lower than before. Now, this is a very bearish sign. It's what's known as a divergence because you have a new high in the price, but the strength of that move is much, much lower than before. And so that's called a bearish divergence. And so professional traders will look at that and just think, something is up here. Something isn't great. Now, what transpired was essentially this was the last gasp of the bull market, the very last throw at the dice before central bank said enough is enough, we have to start reducing liquidity, and then the price collapses. Now, relative strength also showed us that very well, which was great. If you go back to the chart right here on global liquidity, if we zoom out, we can see that the bull market essentially ended as global liquidity started rolling off and the market started to price in the fact that it was starting to come down. So I believe that net liquidity and M2 drives that action, but relative strength also is one of those indicators we can use to actually just get some confidence in different indicators and see where the strength is in the market. The next technical indicator is ATR, or average true range. If you are day trading, very good to use this one for your support and resistance levels and also your stop loss levels. Like if you're going to get into a trade over a few days or a few weeks, you probably will have a stop loss if you're trading in futures and short-term speculating. And so what ATR gives us is the average true range of the asset that we're looking at. The 1 day or the 1 period potential move for that asset in a normal trading environment. So when you have BTC, and we're looking at the week chart here on Bybit, over 1 week, how much is Bitcoin expected to move in a completely normal scenario? ATR gives us that. Go to indicators, ATR, average true range here, put it on the chart. You can change the color through settings right here. Down here, we can see that the average true range of Bitcoin as of making this video is around $2,500, $2,600 over 1 week. So actually, if you go to settings, you can see the inputs here. The length is 14 periods. So that's absolutely fine. You want a kind of an EMA here, or like a simple moving average of those values, which is absolutely fine. So 14 is fine. So what we now know is that if we're looking at a week chart, over a 1 week period, Bitcoin can move $2,500 or so $1,000 in either direction totally normally. And so if you're trading short term and you think, where should my stop loss be? Well, it's got to be at least $2,500 below for a stop loss if you're going long, or maybe higher if you're going short. That is a normal move. And so that's obviously important if you're day trading short term. If you're investing, it's kind of irrelevant. If you go down to the day trading or the day chart right here, and we can look at what the 1 day move would be. This is the day chart. And as we can see, the 1 day move is around $1,000. So as of right now, a 1 day move of $1,000 would be completely normal. So if you're asking, why is the price coming down? Why have we had this move right here? Completely normal volatility for Bitcoin. It's a volatile asset and it can move $1,000 in a day for no other reason than it's just normal trading volatility. Once we know and understand the extent to which Bitcoin can move normally, now we can actually start to, if you're trading short term, put some price levels in that we want to trade at, and we know the volatility, where we can place our stop loss, where it may go. That gives us a lot more confidence when we're actually trading. And if we get stopped out of a trade, well, we know that we've given ourselves a decent shot at actually making money in that trade. An example of this checklist for long-term investors then. So the first one is, what is the macro trend, M2 and liquidity? So just go to the chart. We've got global net liquidity here. We've been having a huge drawdown and a massive bear market. Things have changed though. It seems like global liquidity is making higher highs. This may change and higher lows, as you can see. So potential uptrend in global net liquidity. That's good for risk asset prices and could suggest we're starting to go into something more of a growth phase again. And Bitcoin is following that. So growth phase potential, at least higher lows and higher highs. Maybe we're switching out of a bear market as of making this video. Where is the Bitcoin cycle and trend? We want to have a look at this in terms of, what is Bitcoin showing us? So we're going to go over to some on-chain. MVRV-Z, it's showing us that we are still, way in the buy zone down here. It's not an overheated bull market. Prices are not very, very high in comparison to before. This is still way in the accumulation and buying zone for long-term investors. So we can have a look at that. Now what we want to look at is market trend and momentum. So we just want to have a look at, maybe the RSI. I'm not going to look at that for this example because I think it follows liquidity. But what we can definitely see here is that the momentum has changed, right? You're just looking at prices. Momentum has changed. We're seeing higher lows and higher highs along with net liquidity. So I would say that the market trend momentum is probably to the upside. So giving me a higher probability of winning trades if we're looking to take long trades on pullbacks if we get them. And of course, look at the news flow, news cycle from central banks as well. That's too much for this video, but it all plays in. What are key price levels of that you're going to focus on? Well, for me, let's just draw the horizontal raise. It's definitely this 30K level. This is such a key level. If you break through it very strongly, you're going into a massive bull market. However, for me, I would be happy to accumulate here. Why? Well, because what is your time horizon? If you're a long-term investor looking for 2, 5, 10 years, all of these prices are irrelevant to you. You're just buying. Why? Because you're in that part of the cycle. If we look over to the on-chain, we're in the low part of the cycle where you accumulate. And long-term investors really are price agnostic in terms of these small moves, right? If you're trading over a 10-year period, the difference between 25 and 30, it's just accumulating when you have resources to accumulate. We'll get onto short-term trading in a second. But that's essentially the checklist. Where are you in the cycle? And are you happy to start accumulating if you're a long-term investor? An example for short-term traders or speculators using this exact same framework, we could go again, what is the macro and trend? Again, like I said, the macro and the global liquidity trend seems to be growing. So this would indicate that you definitely want to be taking long positions on pullbacks rather than trying to bet against the price. Because if this continues, prices of risk assets will continue to rise up. So that's a framework initially. Where is the Bitcoin trend or cycle? Again, you can look at on-chain to show you this. And we've seen that the Bitcoin trend and cycle seems to be towards the bottom, trying to move out, which is fairly positive for price. Maybe it's going to come down here again, but fundamentally we assume that Bitcoin is growing and so potentially does usually move out of those zones. What is the market trend and momentum? We can look at RSI right here. I think it's also good to just look at market sentiment as well. But just from technical indicators, it looks like the momentum is actually picking up. We had very low momentum from the RSI, but it seems like momentum's starting to pick up right here with higher lows. Again, like I said, I think this follows global liquidity and M2, but essentially it's telling us that relative strength is starting to pick up. So again, if you've made the decision that you want to go long generally in this market phase, then you want to be going long on pullbacks of the RSI and the price. The next one is what key price levels should we focus on? So we looked at that. We saw the VPVR showing us that. We can do price analysis of these as well. So for me, it's 30,000 as a resistance and really 23.5, let's call it 24,000 as support. So for me, what I want to be looking at is if I'm going long, these higher lows occurring, you do not want to be going long here because that's resistance And so you want to be going long as a short-term trader when you get pullbacks. Now, when should you trade a pullback? Well, that's obviously the key question. The only thing we can actually do when trading short-term is to just not get wrecked on our entry. So if you are buying on these breakouts and going long on these breakouts, then that's fine in an uptrend. But when you're speculating, what you always have to bear in mind is your stop loss. So really, it's much better to try and go long if you think the uptrend is continuing with global liquidity, going long on pullbacks when they occur. So if this occurs and this pullback happens, you have a much better, higher probability of actually a winning trade here, because you're just simply in a better price than you were buying these breakouts. You can go back to Bybit and now get the ATR, which is around $2,500. So what we're looking for here is a pullback. We can know that if the price now is 30,000, a few $1,000s down is not a pullback. That is just a general move in the price and the volatility. What we're looking for is a real move to the downside to then start taking long positions and having our stop loss somewhere at previous support, which would be on this occasion around this price, 23,000. If the price was higher, then it would be this price right here at 30,000. Depends where the price is. Just because you want to trade and make money does not mean that you can open a position and pretend that you got in at the right time. Actually trading, you may only get a few very good opportunities per year where you actually have a really good sell-off to actually buy into during an uptrend, and you're going to have to wait. So none of these, these kind of breakouts and these days down, if you're confident of the uptrend, you just go long, or you just wait for a very good drawdown, a real drawdown, where it comes down into previous support and resistance. That's the only thing you can trade. If you're just looking to go long here, hoping to make money, then unfortunately you could be suffering a larger sell-off into this support. It's much better to actually wait for this to come in, or just if you feel like, we're in a much bigger uptrend and it's the wrong price, you have to go long. Speculating short term is almost impossible, and the only thing you can go off is the support and resistance levels. If you're happy to buy resistance, then go ahead. If you don't want to do that, then you have to just wait for a very long time to be coming down to some sort of support level so that you can actually take a long position to go long, and then put your stop loss somewhere underneath based on ATR. How much can it move in one day? Where is the previous support and resistance? I'm going to go through that much more in depth in specific videos down in the description. It's way too much for this video, so watch those if you want to know specifically where to put support and resistance levels, stop loss, entry levels, and how to actually trade the correct size for your trades if you are speculating short term. The Bybit deposit bonus down there as well if you are a trader. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.